Welcome back, everybody, to another episode from the WIP Report. In this lesson, we'll be looking at a troubled balance sheet. Now, why this is important is because it offers you a big picture view of financial statements. I know I'm not including the income statement here, but really looking at the balance sheet isolated on its own and also the worst case scenario helps put things into perspective when you're looking at your work in progress. All right, so let's start. Number one, low cash balance. $15,000 is nowhere near enough to cover your current liabilities. So what does that mean? You're relying on your receivables to convert to cash. So you hope those receivables are collectible. You hope they're turning over quickly enough so you can meet your obligations. Number two, large underbillings in relation to overbillings. $300,000 in underbillings, $100,000 in overbillings. That may look good for your income statement, but here it could spell some trouble on the projects. Are there any unapproved change orders? Are the estimates too high? Does it need to scale down a bit to balance out your WIP? There's several questions going on here. Number three, large payable balance, $100,000 in payables. Just look at your cash and your AR, just barely above your AP. Puts a lot of pressure on your cash management. What that does is it leads to more draws on your line of credit. As you can see, the line of credit, $75,000, greater than the $15,000 in cash. That's the fourth issue we see here. Operations are really relying on that line of credit. With that, of course, comes interest expense, which, these days is not that great. So those are the four items there. Quickly looking at the working capital ratio, if you include work in process, WIP, meaning the under and over billings, current assets minus current liabilities is $153,000, not too bad. Excluding work in process, current assets minus current liabilities is a negative $247,000. Depending on your underwriter, they may either discount your underbillings and overbillings or just eliminate them completely. But you can see that there's a lot of strain on this balance sheet. In the next lesson, we're going to be covering some ideas that can help remediate some of these issues. See you in the next lesson.